And the internet connection here is a little bit sketchy. So in case it drops, you'll have to inform me on phone.
Okay, sir.
Yeah, with that, I'll start the presentation. Today's presentation is around startups, idea to funding. So it will basically look at what are the different sources of funding, how you can take your idea, mature it, get the funds that you need at different stages. And
Mr. Prakhar Pratapman,
Yes,
you may start.
yeah. So basically the first question that I asked when I got the invitation for this
Sir, just a
presentation.
minute, sir. Sir, we have one host to introduce you, and then you will go on.
Okay, that's fine.
Just
Yes,
a minute. Prakhar, go on.
Go on, please.
A very good morning to everyone present here. I, on the behalf of ACIC IIT ISN Foundation, welcome you all to the 10 days of summer school boot camp for budding entrepreneurs. So the the speaker for today is Mr. Amit Trivedi, and he's the tech and business consultant for ACIC IIT ISN Foundation and consultant for prototype solutions. So let me tell you a bit about him. Mr. Amit Trivedi did his Bachelor of Technology from IIT Kanpur and his Masters in Management from IIT Bombay. He's also worked in as a probationary officer at SBI, where he has associated with several MSMEs and got a first-hand overview of all the problems of small enterprises. He has also worked with an edtech startup before becoming a consultant. In his current profile with Prototypic Solutions, he has mentored various startups at IIT Delhi and IITs. He is also an advisor for various corporates and MSMEs. We, ACIC IIT ISM Foundation, are very proud to have him as our technology and business consultant. So, sir, the stage is all yours.
Thank you, Prakhar, for the introduction. So when I was given this, I was asked to take this presentation on this topic. The first question I had was who the audience would be. And I was told that there are many enthusiastic students and other people with tech background who want to start up, but they do not have that much exposure about the business side, funding and all those things. So I've tried to keep it as simple as possible so that even people who are bachelor, etc., can easily understand it. So before we start and before you start, you have to look at this question. What is a startup and what you are committing to it, right? Because starting up is a serious affair. Your time, your energy, your financial resources, you're going to put in while your peers will be progressing in their jobs, getting good money, going ahead, buying new cars, maybe investing in a new house, and you might be struggling because the chances of success are low in this area. Now, my objective is not to discourage you, but my objective is to make you think seriously before getting on this journey, before starting this journey. So this is the question that each member of your team must ask yourself. What drives you? Why do you want to do it? Is it the money? Is it the motivation for the impact? Or to put it in Steve Jobs' words, that you want to change the world? Or is it the glamour of being a startup entrepreneur? So you have to answer that because it requires a lot of passion. What financial risks are you ready to take? Your savings will be gone. Whatever assets you have, they get lost. And before you become successful, it might end up that you have 5 credit cards and all are maxed out on their limit and you're somehow trying to keep yourself afloat. If you succeed after that, it's fine. If you don't, then it becomes difficult. What time are you committed to give? You're around 23, 22. You want to start up. Are you ready to give next 3 to 6 years to make sure your idea becomes a successful venture? Because what if you fail? What is the backup that you have? Will you get into a job? Will it be easy? Will it not be easy? Usually it's quite easy. But that thing again, you have to think. because for 98 to 99% of the time, the ideas do not actually become successful. Now, to make an idea fundable, you have to also seriously ask this question about your idea to yourself and honestly answer it. Is there really a market? Because the problem that is there with entrepreneurs is that that idea is their baby and they love it so much, they are unable to see it without emotions. I mean, they are not impartial in their judgment. And that is that can really hurt them later on. So is there really a market? If there is a market, do you have the technical skills within that team to make what you want to? If you can make it, can it generate revenue? I mean, seriously, can it generate revenue? Like you will be getting your revenue from your direct users, or will you be getting it from somebody else? Market size and competition. If it's a big market, you can see a big market, and it is a big market, you're going to see competition. Somebody may outdo you at any point of time. While if you are not, say if you are not successful in getting money and somebody else is, they will leapfrog it. And then your venture slowly dies on its own. And the last question you must always ask is, okay, today I see a gap in the service, or I see a gap in the market. Okay, particular product is not being served, or the service is not being provided, or in a B2B setting, this is the value chain where I'm going to intercept in a particular part in supply chain, or maybe in distribution side of things, or in some other way. But is it easily copyable? How will I create a moat so that people are not able to replicate what I have done? And it can be done in many ways. For example, for social media websites, it is just the network effect. If today you want, even if you have a better product than Facebook already has all the users, and moving all the users to another network is next to impossible. I'm not saying it cannot, it does not. I'm not saying that it's not possible, but yeah, it is a challenge.
Excuse me, participants, please mute yourself. It's impossible. Otherwise, it's impossible for sir to speak. Mr. Deepak Kumar, please mute yourself.
Yes, okay, ma'am.
Next question is, you have an idea, you have answered your questions, and you think that you are ready to commit your energy, your time, your passion, your money, and everything, and you think it's a very good idea, and you have all the things in place, all the check boxes are ticked. How do you fund? So the main sources of funding are, in the very beginning stages, it's your own funding, it's your savings, your family and friends, or you can bootstrap. Bootstrapping is basically that you have an idea where you can start at a small scale, create the first few products, and parallelly start selling it, start generating cash flow. And such companies are preferred also by the VCs and angels. When I say angels, it's angel investors. Then based on your idea, there's debt funding, because all ideas are not 100x scalable, and you may be having different objective in life than making money. So you may be a social entrepreneur, you may just be wanting to start a small business and live a cozy life. So debt funding becomes important there. So banks and NBFCs are there. Then there's this equity funding. If you have gone with an idea that you think can generate 10x, 100x returns, then you are going with equity funding, where there will be various stages. First, you'll be dealing with small investor, people who would give you small money, seed money, to start up your idea, to validate it, to make the first few sales. You should have something on your balance sheet and your P&L. And then you approach the bigger fish, the venture capital, and then they will invest depending on the merit. In the end, you exit with an IPO or with some private placements. Other sources are there if you have an idea that has some social impact, or if it covers one of the points given in Schedule 7 of Companies Act 2013, you can go for corporate CSR funding as well as government grant schemes and subsidies. Now, what happens when you use your own funds? When you use your own funds and you start your business, the first thing is you don't have capital, you have very small savings. So you learn to spend frugally, and that continues throughout your journey. You focus on sales, monetization, getting money early. So you focus on sales because your proximity with your customers, right? So the customer stays central to your business. So these are some advantages that you will get in the long term. It is not just in the short term. You will control your cash flows. You will look at your costs because you don't have much money. Product services are getting tested as they are being delivered to the customer. It works very well where the markets are fragmented, where you can start with a small amount of monies. And though it is written with little scope of growth, it also works with those services where there is a huge scope of growth. Hurdle to quick growth because you don't have much money to expand, introduce new product, access new market. So with your own funds, you cannot do that. So probably in a pre-stage funding stage, that is where pre-seed funding stage, you utilize your own funds. Now, when can you go for debt funding? You have a project that is the products are not very novel. They are a small improvement of your existing products in the market, or you are accessing a new geography, and you are not going to expand to too many locations initially, and you have equity capital with you or a partner who is ready to invest equity capital with you, then the banks or the NBFCs may be interested in investing, because what they like is that your product should be defined, market should be defined, cash flows should be regular, and they should cover the repayment of their loan. So they need a good DSCR, that is debt service coverage ratio. It's one of the KPIs banks follow. A KPI is a key performance indicator, for those who do not know. And it is not usually suitable for businesses where assets are not large. If they are not high, there's nothing to offer as a collateral, and banks or NBFCs usually give money against a collateral or against a security.
Mr.
So
Mr. Mukesh, you are
those,
unmuted. Please mute yourself. You're disturbing the talk.
so for those who are interested in these kind of businesses, if your idea results in such a business, for example, setting up a hotel, setting up a hospital, something like that, then this route is what you can look at. You have to find few partners who would put in the equity along with you, and then you can raise the debt. Just to give you an extra information about what will the bank fund: a known product within a new or existing market, which can reliably generate cash to service the loan. They will provide debt when the founders have put in their equity. They prefer physical assets. They also loan you for physical assets, working capital. They give you term loans. And if you are doing business, they provide you with letter of credit, bill discounting, and other such facilities. So even if you're a startup who has got funding from a seed capital, etc., and you are some way into manufacturing, those last line will be important for you. You might still be using letter of credit and bill discounting from your suppliers and to your distributors. Corporate CSR funding: if your idea is covered under Section 135 of Companies Act, this is permitted. And if the activity is under Schedule 7 and in your network, you have connection with a large company that is for which it is mandatory to spend money, and they are ready to give money to you for that purpose, then you can also look at that aspect. These are the things you should explore before going for an angel investor, or like you should evaluate what kind of idea you have. What will it turn out into over a long period of time, from 5 years from now, 6 years from now, 3 years from now, when it is matured, what kind of business it is, what kind of business I envisage. So depending on that, you should try to match your source of fund with that. If you are getting into, say, something related to solar power, something related to infrastructure, or some other project that the government wants to set up, if you are in a backward area, or the entrepreneur is a woman, or there are certain schemes, certain grants, which definitely you will get to know at your incubation center. So you can get the information there. So these are should also be looked into, because if you have got funding from these, especially grants, if you're getting grants, that is like free money, which you can use to validate your idea, to build your prototypes, to check if market is ready or not for your product. You can take that product to different possible customers and get a feedback. So it's a good way to get fund. Last comes the equity funding, for which I think most of the participants are here. Who gets equity funding? If your idea talks about either a novel product service process or a novel way to do an existing service process solution, or it makes quite some savings or generates extra revenue, a new source of revenue in the entire value chain of that product, then you are going to get funding. If you have a team that you are passionate about that idea, you have a very large market potential, and you have a strategic advantage, then you need to raise the equity capital. So some of the stages of equity funding are pre-seed funding, where your network and sometimes bootstrapping helps you run your business. Then comes the seed funding, where again someone in your network may help you start with it, or your incubation center or an accelerator. If you are set up at an accelerator, they may help you connect with some angel or some angel investor who is happy with your idea. He may do. So once you have the seed funding, you have started your business, it has operated for a couple of months, you have achieved the next benchmark, and you think your product is mature to hit the market, you start going with Series A funding, then Series B funding. Usually you don't go beyond Series C funding. And when you're talking about Series B, Series funding, the investments are large. They may run into a few hundred crores. And when you're getting those kind of fundings, it's usually a big venture capital firm or a private equity firm that is going to do it. Exit is mostly through IPO. And sometimes it is through mergers and acquisitions. Some other company takes over your business who is in the same space. So that also happens if you haven't done very well. Some positive outcomes of the equity funding are that you get the money, and with money comes everything. You can hire new talent. You can invest in developing new product, business expansion. Also, for larger products, break even requires large investments and bigger markets. So you can access that. And there's 100x return. I'm writing 100x. It can be anything, 10x to 100x or whatever, depending on how your this thing venture performs. But having said all that, startups still fail. And the biggest cause is lack of cash or funding. So for nearly 40% of the startups, they are unable to get the funds. Other reasons which are cited, but one of these reasons leads to actually them not getting funding, is that it's either about their product. So there's not a product market fit. They had a business model which was flawed. For example, they were connecting a business to a consumer. They were thinking they will get paid by the business. The business doesn't think the service is worth the money. They have to close down sooner or later. They get outperformed by their competition. For example, Paytm Mall came, it competed with Flipkart and others. They had a different model. It did not become successful. Regulatory or legal changes, pricing, cost. So it's either product or your team or your product, some change in environment. So these are 4 or 5 things you have to just look out for. And even there have been frauds with some cryptocurrency startups and other. They have been fraud. Overnight, they have closed their business and took away millions of dollars. So you have to look at your product. That is the first thing. You have to be very clear about your product. And when you are looking at your product and you're starting up, and there is an investor who is willing to give you some money, he will not like a idea where you want to do everything for everyone. You are not sure what your product is. You lack the clarity. You don't know what segment are you catering to, right? So if you try to do everything for everyone, he knows with his small money, you won't be able to do it, and you will get frustrated and you will burn the money and you will not make profit, or you will not survive. Forget profit, you will not even survive. So Best thing is you should understand what core product, core service you are providing, and what are the premium features that will come with it. And who wants that core product? How does that core product outdo the existing products in the market? Right? And to have such a product, what kind of skill sets are needed? And skill sets will range right from the technical side to the business side to the legal side and to other areas as well. So accordingly, you have to build a team, you have to put together a team. The team must be very passionate about this startup. They should be ready to commit there 5-6 years. They should all have the same understanding of the product and the business. They should all be pushing in the same direction, the same objectives. There should be harmony in the team. It is advantageous if they are bringing in some network that may help you raise money later on. So those should be the things you should look at while building the team. For example, if you build a team of 4 people or 3 people and all are IT guys who all know about ML, AI and everything, and who can develop very good apps, they can do very good backend and all that related to IT, but they have no idea about the sourcing. They have no idea about the legal agreements you will be ending with your suppliers or with your customer. They have no idea about how to handle the warranty, how to handle a product that has been sent back by the consumer, because that also entails cost. So you need to have a team that is diverse and that complements each other. And you should always keep an eye on the competition. If you are coming into that space, if you have seen that idea has come to you, you are starting up, most likely you got that idea because the environment is ready for the idea. Though in the previous slide, there was this wrong timing. It happens. You may be ahead of your time. There was a V-Reality firm in Europe. They came up with these virtual reality headsets. In 2018, they closed down because at that time, there were 2 problems they were having. There wasn't enough content. And most of the content is on Facebook, YouTube, and such platforms. So there wasn't enough content for them to make it popular. And the bandwidths available for most of the population in this world was not that great to handle VR content. Now we are seeing Meta, we are seeing Google, we are seeing Apple and all the other big companies entering into this Meta space and everything, and where VR will be like this content will
Eleno
be
का file
available.
कहाँ है sir?
So
बम्पर डाउन नहीं वर्किंग टैंकी आगे
Mr. Deepak Kumar, mute yourself.
did you want me to start the video?
No problem, sir.
Because of the
If you
bandwidth,
can-
I
if
was
you
not
are-
running it. So
Yes, sir. You will lose the connection if there is a problem.
yeah.
No problem, sir.
Yeah. So that is something that your team is the enabling factor for your product to reach the markets, to the final consumers, and to generate value. So your team is the most important thing beside your product. Then you have to look at the competition that can always put you out of business. You have to look for regulation and taxes. For example, recently Government of India just asked various VPN services to store 5 years of data of their clients, of their consumers. And you suddenly find that the reason they are taking VPN may no longer apply. So the market may shrink. A couple of VPNs have even left the country. So those things can always happen. Revenue models, you should know where the money will come. There are different kinds of revenue models. So you have to set your revenue model which generates cash in a more sustainable way. For example, if you can have a pay per use model and you can also have a subscription model, usually an investor will prefer one that has a subscription model. So if it cannot have, it's fine. Then the cost structures, many a time when you're starting up, you are fresh technical people, the cost for you is cost of making the goods. You forget about the marketing part of it, the distribution part of it, after sales service part of it on one hand, on the other hand, searching for the right supplier, right? Payments made to other HR that you will hire along the way. And you think that, okay, I'll hire an intern and he will do it. Well, intern will be there for 1 month, 2 months. He's not bound by you. And he will not be that committed to your work also. So you have to look at your cost structures very carefully. There may be some other costs, for example, taxes, GST, etc., which you might not have accommodated when calculating your margin. These seem to be obvious mistakes, but I've seen them happen in many business plans that I've vetted. And cash flow. See, in the end, cash is the king. If on paper you are having a profit of say 50 lakh in the first year, but 100 lakh of it you haven't received from the customer, you are short of 50 lakh in cash. So though you are having a profit on your profit and loss statement, still you are having a loss. You don't have the cash to pay, to continue running your business, to pay the salaries, etc. So cash flows you have to manage, account receivables, that the money that you have to get from your consumer, you have to manage. So you have to look at those things. And cash, whatever cash you spend, it goes into, for a startup, it's usually into operating activities. Otherwise, if you have surplus cash, the companies also invest them, also get cash financing, get cash for financing and all that. So those things you should have an idea, and you should focus on the cash. Accounting will be taken care of by the professional who is looking after your accounts. But as a entrepreneur, as a founder of a startup, you should always keep an eye open for cash flow, because without cash, your company is finished. So before we go ahead, let us talk how angel investors make money. Angel investors are these high net worth individuals. Even Ratan Tata has started investing nowadays. And Sachin Bansal of Flipkart, he is doing that. And there are many other, Rajul Garg, and there are many other successful entrepreneurs who have become angel investor, because they've gone through the process. They understand the risk, whether they are in a condition to get good grasp of whatever is presented to them. They can guide those companies to success. So how do you find angel investor? That we'll look at. So there are various angel networks at city level, at national level. India Angel Networks is there, V-Circle is there, and then Chandigarh, Delhi, Bombay, they all have their own angel networks. Bangalore has one, even Calcutta has one in East India. So you can try to reach out to someone there, get connected with them, and they also have their online presence. So you can look for more details online for them. They usually invest small amounts, and they have 2 times to exit. Either they exit when the VC comes with a Series A, B funding, or they will hold if they think the idea is good and the VC is investing some money, they have confidence on the idea, they may hold on for larger profits when the company goes public. They also have network, because these are high network individuals. Most of the VC managers are within their networks. They are connected to each other. So they may also help you reach out to the right VC fund. VCs work differently. They are not investing their own fund. The VC funds usually every 2 years, 5 years, they are raising funds, and each fund has a theme. Okay, I'm going to invest in biotech firms in India, and I'm looking to raise 2,000 crore for that. And then they will go on a roadshow to different cities, raise money, do that. And once they have got that fund, they will start their activities. They will invest for usually 2 to 5 or 6 years, generate good returns. And it's usually 15% of their investments generate 10x, 100x kind of returns. Rest of the 50% of the investment, they fail completely, and the remaining barely break even. How they are funded? The VC fund managers, they usually get 1 to 3% per annum of commission. This is 1 to 3% of the fund value for managing it. Now, how do you choose a VC angel? Every VC fund will not fund every kind, every startup in every sector. So you have to look at the sector, the geography, the proximity. Proximity and geography are especially important if you're looking for angel investor. Someone who is close by is more likely to fund you, because you can meet more often, he can guide you more often, his money is invested, and he has experience. So beside the money, that experience is also a very important input. Also, each angel investor or a VC will have a range within which he can fund. Some funds, VC funds can invest as large an amount as say 200 crore or 100 crore, but that happens usually in Series C, etc. They also, best way to judge is go through their portfolio. It is usually available online. So when you should start doing your shortlisting. Once you have once you have set out to seek the funds, you should start shortlisting the angel investors in the initial phases. And if you have gone through the angel investor, you should take his input for whom to contact, as well as do your own diligence, that you should shortlist, see which VC is funding in the same space, in the same area. If you have come up with a, say, a FMCG startup that wants to supply, say, some eco-friendly products and all those, you have to look out those VCs who have funded companies in that space, right? So that is how you go ahead. You shortlist them, because if you just send a cold email, most likely it's going to not yield any result. You also have to look that at least a few of his companies have become successful. That indicates the quality of input he's going to give. Because see, once he buys the equity, he will have some kind of inputs to your business. He will, like, you will not be in 100% control of your business, but most of the time that is beneficial. So you should not be wary of it. You should not be afraid of it. And always be focused and make a great pitch. So your pitch is important. When you're making your pitch, you should again be talking about exactly the problem you have set out to solve, how your product solves it, and your team, and how you'll be able to do it, what's your advantage, strategic competition. You'll find enough material on that, or you can reach out to me. I can guide you on that. So you need to have a good pitch. You have to research past company, again, look for links. Then you have to look for mutual network. So you have shortlisted your VC or your angel investor. So you have to look for your mutual network, how to reach him. Is there somebody I know who knows somebody who knows that person? There may be 2 or 3 steps in between. And how do you find out? You go through press coverages. You go through if they have a YouTube channel, go through the blog. Look for what kind of ideas and themes they are saying. If they have a blog, then you can go comment there, see if there is a response. Twitter, sometimes communication does happen there. And another good way is to attend events and conferences where such VCs and fund people are coming. And before you meet them, if there is a buzz, you've been able to build a buzz for your company and your product, then that is helpful. So in your first meet, once you go out to meet them, you should be focused on your product, team, market, competition, business model, the product roadmap, the technology overview, business development needs, and financial status. That how at each stage your balance sheet would look like, what your probable incomes would be, sales would be, the number of customers you will be having, what your customer acquisition cost would be, what is the churn rate there. If it's an online business, then click-through rate and all those things which you already know, probably better than me. So those are things, those key metrics and all those, you have to present them. And once he's interested and they agree for a series of funding. So for that funding, there's a term sheet. The term sheet lays down what each party will bring to the table. So before handing their money over to you and preparing this term sheet, there will be a pre-term sheet phase and there will be a post-term sheet phase. In the pre-term sheet phase, they will contact your few important customers. They will like to meet your partners, your suppliers and other people. They will seek information from them. They will also seek information independently, not through you. They will like to meet your broader team, the hirings that you have done in the last few months or years of your operation. Then they will sit with you, understand your vision, your strategy, what you have in your mind. Then they will fix it based on their experience on the ground. They will even help you line up all the hiring that you have to do post deal. And then there will be a formal presentation of the term sheet. Once the term sheet has been signed, they will, yet it's not binding. But these are rough terms and conditions. And after that, they may go ahead with an accounting audit, a legal audit if they are not sure about something. There may still be some reference calls and other things. And then you sign the legal document. The whole process of this deal, from your first presentation to the signing of the legal documents, usually takes around 2.5 months. But it may extend in case they're not sure. And at any stage, it may break also before signing of the documents. So that is the process I've talked about you. What does the VC look for in a startup? And this is a question I asked one of my friends who runs a VC fund. So he was very candid that once there is only a plan and just a plan, and there is a team and they have approached me and they have done some kind of ideation, they have done some kind of testing, maybe built a prototype, maybe. So they look for 3-4 things primarily. One of them is the thesis. And when I say thesis, what it means is that how do you perceive the behavior of your target customers to change over time? How do you see the population changing their consumption pattern over time? For example, if we look at own your own OYO rooms, right? So if you believe that people going forward would be engaged in traveling more than staying at their homes, they will be looking for clean towel, clean bed sheet, and clean water, and some basic amenities which an OYO room has to provide. Then if you can predict that kind of change in behavior, and which the VC also feels is going to happen, you're more likely to get your funding. So a big idea, 100x idea, will look at that thing. For example, when Flipkart started out, Amazon was not there in India then. It was one of the first e-commerce companies which actually grew. So when they started out, internet connections weren't that good. It would take roughly 10 seconds, 15 seconds to open the website. But still, they saw that going forward, it has been happening in the West. So most likely in India also, the mobile technology will change. The internet access will change. The penetration will increase. People will be more comfortable transacting online. So those were the thesis on which they built their business of e-commerce. And also, their app or website is not a business. The real business is delivering groceries, mobiles, and all those things to your home. They started with books and such stationery and such items, which had comparatively better shelf life. So,
Excuse me, sir.
yeah,
Excuse me, sir.
yeah.
Yeah, thesis means the physical. Thesis means the physical overview of the market, right?
A physical overview of the market, the change in the behavior of the market, how people are going to
Yeah,
change the
that
consumption
is
in the future.
emotion temperament.
In coming time, in another 2-3 years, how is it going to change?
Yeah,
Yeah, because whenever
is
you set up a business, it has to continue forever. That is how you assume,
yeah,
right? So that is what a thesis is.
there should be continuous flow.
Yeah. So as the behavior changes, your product should appeal to them with that changed behavior. If it is not appealing, then most likely the venture capitalist who already has experience in such ventures, he has funded so many of them, he will not be interested.
Yeah,
The second thing
okay.
that they will look for is the founder mindset. The passion you have and the expertise you bring. Without passion, your expertise will not help. You'll be a good employee, but not a good founder. And with passion, without expertise, you cannot go anywhere. So that is the second most important criteria. Third is, since you have reached to the VC stage where you're seeking funding from a VC, they will also look at the future market size, future scalability, and are you really addressing a big market, or are your numbers inflated? So those are the things, those are very important to them. But in addition, they will look how your product is a differentiator. What is the unique selling proposition for it? What is the moat it will create? How will it prevent competition from taking over or defeating it? how you're positioning it for different market segment. Have you defined your market very well? Have you defined your segments very well? And this segment can be based on behavior. They can be based on income groups. They can be based on a different criteria. But you should be very clear about the market that you're going to serve. And also, the best place to start is from niche markets. Such markets where a large player would not focus initially. So that helps. They also look at your product market fit. Then the next question is, are you a first mover or not? So if you are a first mover, the obvious question is, why you are the first mover? Why nobody else thought about it? And if you're not, then how do you plan to outperform the first mover? What is different? Again, you come back to this differentiator, USP, moat, and all those things. Then how much of pre-funding groundwork have you done? Because you are in an early stage, you have just started up, maybe just built a couple of prototypes, or maybe just have done some bootstrapping, have say 5 or 6 customers. So have you understood the market, supplier, customers? Is your revenue model appealing? Are your cost estimates right? Have you looked at taxation? Have you looked at regulations? So that shows your passion. Your groundwork is the measure of your passion. Then they will look at your proof of concept, prototype, etc., that you have got, if you have any till that stage. For a late stage startup, it's much easier for a VC because you already have customers, you already have revenue, you already have costs in place. Like there's some cost structure you already have, you're incurring. Then there's a growth rate you can show. Okay, in the last 1 year, month-on-month basis, we were growing at 5%, 2%, 10%. And other metrics are there, other KPIs are there, which they can evaluate you on. And then they will look for your business efficiency. With that, with the capital you had, what kind of business did you do? Did you achieve any operating profit, or what were your operating losses? When you were having losses, were they due to the fixed cost, or in operation of your business, you are having losses itself? So those are the things they will look at. They will look at your balance sheet, financial statements, and they have more information to evaluate you. It's slightly easier, but then since their risk is less, they also, this is usually a series C, B kind of funding, or even subsequent funding. So for them, the returns are also comparatively less. So different funds prefer different sectors. I have already talked about it. They have different riskiness proposition. For your proposition, they may be willing to take that riskiness or not, because if your business is really going to be profitable, it's going to give huge profit. Only once you've invested, say, 1,000 crore in it, a small VC or a small fund will not go ahead with the investment, right? Then you have to look for a big fund. If the risk is very high, probably a fund like Tiger may go ahead and invest in your, they have large capitals, and they believe in higher risk, higher reward kind of sectors. The investment range you have to match, and the cost of business is important to them. When I say cost of business, it's like once they have set up their, once your system, once your business has stabilized, it has achieved break even, and then it moves into that profit making territory, where it does not require more infusion of fund. To achieve that, what is the investment you are going to need, both for operating your business and both in setting up your business? So that matching you have to do whenever you are approaching. Now you have a B2B product or a B2C product. Is B2B different? So for a B2B, it is more difficult getting funding. Why? Because if a company is making a product and you tell them that, okay, this part of your product, I am suggesting you a different part that will improve its performance by 3% or 10%. They will think, what if I make the change and it doesn't appeal to my customer? So should I take that risk? It will require me to change my assembly line. That is a big investment. It might require me to handle the products differently when I'm delivering to the consumer. I don't want to invest in that. So those kind of hesitations are there as far as your customers are concerned, your business customers are concerned, right? So if you have such a product, unless you are improving and changing things drastically for them, you're making a marked improvement, most likely they will not engage. And because they will not engage, you will not generate revenue. So this is the theme, this is the thesis, that as an investor, I would look at if I'm funding a B2B. So there will be a difficulty in sales. So I will be a little bit cautious in making that investment. So for B2B, unless you are making a big impact for your consumers, most likely getting funding will be a little more difficult. It is, I don't mean to say you won't get funding, you will get funding, but then you'll have to look your product very carefully, and the intervention you are doing to your consumer will also matter. If you're simply changing, say, the outer packing of it, you have developed a new material which keeps the product very safe, for which they will not have to invest too much. That kind of product will get the funding because that has more features of a B2C kind of product than a B2B kind of product. So you have to look at that, those things. These are some of the important VCs who are active now. You can look at their portfolio. You can look at whom they have funded. And Excel Partner, Nexus Venture, Kalari Capital, Venture East, Bloom Ventures. These are all well known. You must be already knowing about it if you are into startup space. So you will have to look at this. You have to look at what areas they are in. You will have to find the network, how to reach them. And once you have reached them, you can pitch. And once you have pitched, they may call you for a meeting or they may not. If they call you for a meeting, give a good presentation, a focused presentation. They don't have much time. And thereafter, see if things go ahead or not. So that was all from my side. If there are any questions regarding this presentation.
Sir, once repeat B2B. What is the B2B?
जो B2B आइडियाज आपके होते हैं बिजनेस टू बिजनेस बोले जाते हैं, जैसे कि फॉर एग्जांपल एक कंपनी कोई प्रोडक्ट बना रही थी एंड विद इन दैट देयर वाज सम कंपोनेंट जो आपने एक नए तरीके से कहा कि इस कंपोनेंट की जगह ये कंपोनेंट अगर लगाया जाए तो प्रोडक्ट 10% ज्यादा लाइफ होगी इसकी, एंड यू रीच आउट टू दैट कंपनी कि भाई इसमें आप अपने इसमें ये प्रोडक्ट जो लगा रहे हैं उसमें हमारी डिजाइन का प्रोडक्ट लगाइए, सो इट इज गोइंग टू इंप्रूव योर लाइफ ऑफ योर प्रोडक्ट एंड योर कंज्यूमर्स आर गोइंग टू लव इट. अब वो कंपनी जिसको आप अप्रोच कर रहे हैं दैट विल बी योर कंज्यूमर फॉर यू, दैट इज अ बिजनेस. सो B2B इज बिजनेस टू बिजनेस. यू आर अ बिजनेस, योर कस्टमर इज आल्सो बिजनेस. ऐसे केस में क्या होगा कि दैट कस्टमर वो थोड़ा सा सोचेगा यार मेरा बिजनेस तो चल ही रहा है इसी प्रोडक्ट के साथ, में क्यों इसमें बदलाव करूं, क्यों छेड़छाड़ करूं. इफ इट इज नॉट ब्रोकन व्हाई फिक्स इट, राइट. तो वो आपको हेजिटेट करेगा देने में जब तक कि आप उसको बहुत बड़ा बेनिफिट नहीं दिखाएंगे कि हाँ आपकी कॉस्ट सेविंग 10% हो जाएगी, आपका मार्जिन है अभी 8% था, आप ये करोगे 4% एक्स्ट्रा सेव होगा, आपका 150% प्रॉफिट हो जाएगा. तो वो एक बार ट्राई करेगा, एक बार थोड़ा सा वो, अगर आपने कहा कि इससे सिर्फ 0.5% का अंतर आना उसकी कॉस्ट पे, वो नहीं इंटरेस्टेड होगा. तो डिपेंडिंग आप B2B स्पेस में अगर हैं, हाउ योर प्रोडक्ट और इंटरवेंशन इन द अदर प्रोडक्ट जहां पे आप जा रहे हैं वो करेगा इफेक्ट, उसके बेसिस पे ही आपकी सेल्स जनरेट होती है और वहां सेल्स पाना थोड़ा डिफिकल्ट हो जाता है. तो अगर आपका B2B वेंचर प्लान है, आपका आइडिया एक B2B वेंचर बना रहा है, तो यू हैव टू बी केयरफुल दैट इट शुड मेक अ सब्सटेंशियल इम्पैक्ट सो दैट यू कैन गेट सेल्स. और जब VC आपके आइडिया को देखेगा और वो देखेगा कि हाँ ये एक सब्सटेंशियल इम्प्रूवमेंट ला सकता है अपने कस्टमर्स के लिए, उन बिजनेसेस के लिए जो आपसे प्रोडक्ट खरीदेंगे, देन इट विल फंड इट, अदरवाइज इट विल नॉट फंड इट. दैट इज व्हाट आई मेंट बाय B2B.
Thank you, sir.
वेलकम.
Sir, I have a question.
Yeah, ma'am.
Sir, what is accelerator program for an incubator?
Okay.
And how can accelerator program help an incubation center?
Okay. Usually their accelerator programs are there, so they will help you in 2-3 different ways. The kind of expertise you can get, see, because before setting up an accelerator program, you need to have some expertise in certain areas that you're going to focus on. For example, out of Dhanbad, you're working out of Dhanbad and it is known for its mines and minerals. But in addition, there may be some other ecosystems around, some other industries around, right, where you see that they can grow. For example, processed products from those metals and all those based products and those things. So you'll have to get expertise for that. You will have to get infrastructure related to serving that particular kind of sector. And those are things. So when such an ecosystem is created, the startups that are coming there, they get the expertise, in their interaction, they learn more and they are able to get funding more easily. Then you also connect with your angel investor, etc. And those kind of funding also you can arrange.
वो लेकर चल गया सर्विस में।
So that is what happens when you have an accelerator program at your center.
पानी सर्विस में चला गया, सर्विस में
Part
गया,
4X,
पानी भर
if you
दीजिए इसमें मैडम।
have any question, you can ask. Otherwise, please mute yourself.
Can you mute everyone?
Anyone else who wants to ask question to sir?
Yes, now who wants to ask the question, please unmute yourself and ask the question.
Sir, there is a question from Sulagna Nandi Datta. Is it
Okay.
safe to have plan B for a startup?
Okay. Oh, it's there in the chat.
Yes, sir.
What do you mean by plan B? It will depend on that, actually. For example, there was this firm, I think in board or something. Yeah, it was in boards. They were making electric boards, skating boards, right? And they were getting funding also, they were growing also, but suddenly they got a very big order for electric scooters. So they just changed their business. And once they changed it, they failed because their investor was no longer ready to invest in them. So if you are having a plan B, it should not be too far off from your plan A. Okay, for failures, you must have a plan B. You definitely must have a plan B, and a plan C is always a job you can get. But plan B, it's good to have a plan B. But can the same company, the same venture perform that plan B, the same team, this thing? If you mean that your plan B is also a startup, that is to substitute a startup. So in your individual capacity, you must have a fallback plan. But when you're going ahead with a venture, with an idea, you should have full faith in that idea. You should not be thinking about, okay, if it fails, I'll do that, because most of the time you will end up failing and doing your plan B, right? So your commitment should be with your plan A only. Once you see it is failing, once you see it is not going to work, then you may think about another idea. Or maybe again, when VCs are funding you, they will like to see what kind of how you've got that idea, because there are two kinds of people they will meet. One who saw an idea and want to work around it. The second set is those people who faced a problem, they solved it, and now they think it's a big problem for everybody and I should solve it for everybody. This second set will get a funding much easily.
Prakhar Pratap, you may ask a
Yes.
question to sir.
Yeah, there is a question that product positioning. Yes, changing a product positioning may happen even before you've reached the market. It does happen, and it very much happens. Because once you'll be interacting with your VCs, with your angels, with your peers in the same field, you will be getting really good ideas. Tata Nano, though it's not a startup, they started with a positioning that failed them. Right? Later they changed, made some sales, but they could never recover. Yeah, Prakhar, who was asking the question?
So it was Prakhar
Yes,
Pratap.
sir.
Yeah, Prakhar.
I was asking, sir, like if a startup fails, I mean, startup has its product in some different market. If in that market the startup fails, so can like if we place the product in some other market, like tap into some new market, can like that? Are there some examples, or can that actually help in the startup reviving?
It does that. It happens. I won't say it doesn't happen, but usually there is a cost of entering a new market. So if your company can afford it, you can do that. Or if your investor agrees with you and wants to fund you for that, then you can do that. Because see, in the end, everything is about costs and the funds you have at hand.
Okay, sir. Okay, sir.
So we have another question from Mr. Prabhat Kumar. He said that if we started on multiple ideas and they are related, should we stick to only one until it is materialized?
Yes, definitely. We should start with the core idea, which you think has maximum value, is most defendable, and can be implemented. So the first idea should be picked up. We should act as a pivot around which you can build that. It will also depend on the kind of the stream of ideas you are having. Are they interlinked? Are they vertically in a value chain, or are they aligned horizontally? So if it's horizontally, if they are all within the industry, they're horizontal to each other, then that means you can do one idea, second idea, third idea independently. If they are, if you're thinking about, say, something that is where output for one forms the input for the next, then you have to choose the right place to start, where margins are there, where you'll get funding easily, where competition is less. And then, yes, it's best to focus on a single idea.
Yeah, thank you. I just was thinking, like, if they're little related, then we can progress one idea, then we can join other, and like that.
Yes, that happens. Most of the entrepreneurs do that. No, so
Sir, we do have another question from Mr. Bhanupata.
yeah.
A product prototype and app and website algorithm is necessary to show at the time of fund pitching if startup is in ideation stage?
So it depends whom you have reached out to, because if it's in the ideation stage, at least, first of all, you have to pitch your business, right? Your app is not your business, right? It is a means of reaching out. It's a channel, how consumer will reach out to you. So if it is so critical to the business, if it is so important to the business, then it must be there. Otherwise, you can talk about where your product is going to intervene, right, in the market. There's something you must be aware about the value chain. So if you're entering a product or a service, so there's already an existing way the companies are operating. So from starting from your the first phase till the finished product, there are steps in which value is being added. So you must be changing either the entire of it or you a part of it. So is it central to it? Is it critical for it? If yes, then you have to do it. If the backend is critical to it, then you should give some idea how you are going to implement it, right? But your main business idea, that should be there. Usually apps are easy to make and easy to amend. So as an investor, I would never worry too much about the app. I would more worry about the features you're going to implement if you're planning an app and if an app is central to your this thing. But it's good to have something to show. That shows that you're serious about it, you've put in some effort. Yeah. Welcome.
Anyone else who wants to ask questions to sir? Please unmute yourself and then you may ask. Prakhar, you do have any other questions to sir regarding your business plan or not?
Hello, sir.
Yes, please.
Yes, sir. This is Salesh. सर
Yes.
मुझे अपने बिजनेस प्लान और रेवेन्यू मॉडल बनाने में प्रॉब्लम आ रही है
ओके
और मैं एक अच्छी टीम इसके लिए कैसे बना सकता हूँ?
फिर से रिपीट करिएगा, लास्ट लाइन टूट रही थी। हाँ
सर मुझे अपने बिजनेस प्लान और रेवेन्यू मॉडल बनाने में प्रॉब्लम आ रही है।
ओके
इसके लिए मैं एक अच्छी टीम कैसे बना सकता हूँ या कोई है जो मेरी इसमें मदद कर सकता है?
रेवेन्यू मॉडल बनाने में क्या दिक्कत आ रही है? लाइक आपको कुछ टेक्निकल इंफॉर्मेशन नहीं है कि रेवेन्यू प्लान कैसे बनता है, या फिर आप सोर्स ऑफ रेवेन्यू ही नहीं समझ पा रहे हैं?
वो सब है, वो समझने में प्रॉब्लम नहीं आ रही है, बट ऑन द पेपर इसको लेके आने में प्रॉब्लम आ रही है सर।
ओके ओके हाँ, तो इसके लिए देयर आर मेनी कंसल्टेंसी सर्विसेज। कोई भी आपको बिजनेस कंसल्टेंट या टेक्निकल कंसल्टेंट जो इस एरिया में वर्क करते हैं, दे कैन हेल्प यू विद दैट,
यस सर।
including our firm Prototypic Solutions that also works in this area.
Prototype solution.
Yeah,
I
Prototypic
can
Solution. Yeah, you can contact me. My email is amit.trivedi@live.com.
Okay sir.
Sir, Salesh, you are done with your question? I think so. So there is a question from Mr. Rishikesh Ray. He asked that how to share equity to the investor in ideation stage. What is thinking I should keep in mind? Like what are the thoughts I should keep in mind? First.
Right. When the ventures are usually about to go public, I'm talking about the later stage first. Usually the promoters together have something between 10 to 30%, right? So in between you have VCs who are valuing it. Before that you have angel investors who do it. And again, depending on the quantum of fund you need, usually it's difficult to place a number without having a business model in front of you. But I would say 15 to 40%, this number stays within that range. Usually you do not offer more than that, because see, even an angel investor will not ask for a large equity. Once he has offered a large equity and you have very little equity left, your own motivation will not be there, because see, for all the effort, for all that work you are doing with little salary or no money for multiple years at a time, you deserve to get that money, and that will come based on what you retain at the beginning. So you have to keep that in mind. So whenever you are making an offer, when you're accepting an offer for investment. I hope I answered that question.
Yes. So another question from Infinix Smart Forex. He said that prototype building is key aspect. How to deal with it in present scenario?
Could you explain the question? Could he explain the question more? What does he means when he says?
I think,
how
sir,
to build it?
he wants to see why is prototype building the main important thing for this in this present market, or is the idea enough? I think so.
Okay. So why prototype building is important? It is because कोई आपसे आके कहता है, see, you are asking for money, you are an entrepreneur, you are asking for money, you are honest, you know that the person who's investing, he is approached by 100 people, only 10 out of them are really serious and passionate about their idea, 90 aren't, right? So he cannot burn his money. And how do you demonstrate your passion? How do you demonstrate your product is going to work? The first way is that if you can make a prototype, you can present a prototype, working prototype, he will know at least that idea is there, you are passionate about it, you have gone ahead and made it. So he will have more confidence in you. He will see that there is lesser risk in his investment. And he may settle for a smaller share of equity also for the same funding.
Excuse me, sir.
Yeah.
Hello, sir.
Yeah.
Yeah, yeah. In right before 6 months ago, just I was going through the market and I was researching for some businesses or starting a startup. So I went through a simple ball pen making machine. So I wonder how this will play in the market as a key role. So I inquiry all these tools and machines. That is very simple, but main aspect is that other thing that there is also some drawback. So there is a fear that if I can start some business, if in middle it will break out, then how can we stand as a strong person?
इन द बिगनिंग जो एकदम शुरुआत की स्लाइड्स में थी उसमें यही पहला आई थिंक सेकंड स्लाइड यही थी कि ये क्वेश्चन आपको अपने आप से पूछना है कि आप 4 साल 5 साल अपनी जिंदगी के लगा देते हैं, अपना सारा पैसा पूंजी लगा देते हैं और दिन में 16 घंटे काम करते हैं तो फेल हो जाएंगे, जिसका चांस 95% होता है, 98% होता है। तो आप क्या उसे एक्सेप्ट करने को तैयार हैं? आप वो रिस्क लेने को तैयार हैं? शुरू में ही देख लेना है, राइट? वो मतलब वो है ना कि ओखली में सर दे दिया तो फिर चिंता नहीं करनी चोट लगेगी कि नहीं लगेगी, राइट? तो अब आपका जो बॉल पॉइंट वाला है, देखिए कि बहुत ही जेनरिक प्रोडक्ट है, इसके बहुत सारे मैन्युफैक्चरर हैं। अनलेस आप बॉल पॉइंट में कुछ नया इन्वेंशन कर रहे हो कि हाँ जैसे टंगस्टन कार्बाइड टिप होती है, आप कोई ऐसे टिप बनाए ब्रेकेबल ना हो, या आपने कोई नई टाइप की इंक बनाई, जैसे जेल आया था नॉर्मल बॉल पॉइंट के बाद जो जमता नहीं था जाड़े में, वो कुछ कर रहे हो, देन इट बिकम्स समथिंग। और हाँ, देन इट बिकम्स एन आइडिया दैट कैन अट्रैक्ट दैट काइंड ऑफ फंडिंग। अभी जो आपका आइडिया है, यू कैन, इफ यू थिंक देयर इज अ मार्केट दैट इज अंडर सर्व्ड और आप उसको प्रॉफिटेबली सर्विस कर सकते हैं, तो ये एक रेगुलर आइडिया है, आप इसको लेके बैंक को अप्रोच कर सकते हैं और एक कुछ पैसा खुद लगा के इसको डाल सकते हैं कभी भी। इसके लिए आपको एंजल इन्वेस्टर तक जाना नहीं पड़ेगा।
Yeah, that is very lump sum amount.
Yeah.
Okay, sir. Thank you, sir.
Welcome. Are there any other questions?
Yes, Mr. Prabhat Kumar, if you have raised hand, then please
Yes, sir.
unmute yourself and ask.
Yes, sir. Just my question, like, if it is educational product, something like I am putting forth some amount related to some course development, some strategic course, and if I want to raise money for that, is it okay, or we can approach angel investors for this kind of things also?
सर ये डिपेंड करेगा कि आपके प्रोडक्ट में नया क्या है, क्योंकि ऑलरेडी अगर देखें, अगर आप प्लेटफॉर्म बना रहे हैं तो ऑलरेडी यूडेमी से लेकर बहुत सारे प्लेटफॉर्म्स ऑलरेडी एग्जिस्ट करते हैं। अगर आप सिर्फ जिसे कहते हैं ना स्मार्ट क्लासेस टाइप का कुछ बना रहे हैं तो ऑलरेडी कई कंपनीज हैं और एक दो फेल भी हो चुकी हैं, राइट? तो इस टाइप के प्रोडक्ट में आपको एंजल इन्वेस्टर से फंडिंग लेने में बहुत दिक्कत आएगी, जब तक कि आप एक अपना यूएसपी नहीं दिखाएंगे, एक ऐसी चीज नहीं दिखाएंगे जो ना सिर्फ कंपटीशन में नहीं हो बट वो आगे आप उसको कॉपी भी ना कर पाए, राइट? तो तब आपको एंजल इन्वेस्टर पैसा देगा। अप्रोच तो आप कभी भी कर सकते हैं बट मोस्ट लाइकली वो उसके बिना पैसा देगा नहीं।
Okay, means it should have some physical presence also, something like that.
नहीं, फिजिकल की जरूरी नहीं है। अगर आप कोर्स कंटेंट डेवलप कर रहे हैं तो वो तो सॉफ्टवेयर फॉर्म में भी हो सकता है ना? आप उसको, पर ये है कि कभी अपना प्रोडक्ट पूरा को पूरा शेयर ना करिए, आइडिया शेयर करिए कि मैं ये कर रहा हूँ, ये नई चीज कर रहा हूँ, ठीक है? फिर जब फंडिंग आने लगती है, फंडिंग को तैयार हो जाते हैं, एक एग्रीमेंट उनसे भी होगा, एक टर्म शीट जैसा उनके साथ भी साइन होगा, तब आप उनके साथ थोड़ा प्रोडक्ट का डिटेल शेयर करते हैं और जब वो पैसा देते हैं देन ही इज इनटू इट। वो आपका पार्टनर एक तरीके से हो गए हैं एंड ही विल गाइड यू टुवर्ड्स द राइट पाथ, क्योंकि उनका खुद का पैसा फंसा हुआ है, राइट?
या
ये चीज है।
ओके, थैंक यू।
वेलकम।
Sir, there is another question from Mr. Bhanu Pratap. So if his startup concept is quite unique and quite new, then he has a fear that the investor might copy it. If it's not registered in intellectual property, so what shall he do?
देखिए, अगर सर उस पर आईपी क्रिएट हो सकती तो सबसे पहले आईपी क्रिएट कर दीजिए। इंटेलेक्चुअल प्रॉपर्टी राइट अगर उसमें किसी तरीके से क्रिएट किया जा सकता है तो वो कर दीजिए। उसके लिए आपको आईपी कंसल्टेंट से किसी बात करनी पड़ेगी हमारा फर्म उसमें भी वर्क करता है वैसे, बट हैविंग सेड दैट, अगर आपको लगता है कि आपका आइडिया कॉपी हो जाएगा तो आपको चॉइस ऑफ इन्वेस्टर बहुत क्लियर रखनी है। हर इन्वेस्टर, आइडिया तो 100 लोग के पास हो सकता है, पर हर के पास मार्केट की, कॉस्ट की, सोर्सिंग की, मार्केटिंग की, डिस्ट्रीब्यूशन की, आफ्टर सेल सर्विस की उतनी अंडरस्टैंडिंग नहीं होती है कि उसे कर दे। अगर आइडिया यूनिक है तो वो उसको इम्प्लीमेंट करने में आपके जितना तेज नहीं होगा, बिकॉज यू हैव डन मोर रिसर्च, यू नो मोर अबाउट इट, एंड यू डोंट हैव टू डिस्क्लोज द एंटायर थिंग एट द फर्स्ट गो। जो पिछले क्वेश्चन में मैंने कहा, यू डोंट हैव टू डिस्क्लोज एवरीथिंग। आपको अपने प्रोडक्ट, अपने आइडिया के यूनिकनेस से बताना है कि विद इन दिस इंडस्ट्री, दिस प्रोडक्ट, दिस सर्विस, दिस इज व्हाट आई एम गोइंग टू डू डिफरेंटली। और उसको आपका आइडिया कॉपी करने से ज्यादा प्रॉफिट आपके आइडिया जैसे 15 आइडिया फंड करने में आने वाला है। सो मोस्ट लाइकली ही विल नॉट डू, बट ये वाली मिस्टेक्स इनिशियल सीड जब आप कलेक्ट कर रहे हैं तब हो सकती है, इफ यू एंड अप मीटिंग समवन। यूजुअली इसीलिए आप एस्टैब्लिश्ड एंजल इन्वेस्टर्स वगैरह के नेटवर्क से ही फंड रेज करना प्रेफर करा जाता है कि फॉर एग्जांपल दे विल नॉट ट्राई टू स्टील योर आइडिया इफ यू आर गोइंग टू से इंडिया एंजल और ऑल दिस। So I hope I answered your question, or is there something more to it?
Any more questions from the participants? Sir, one more question from Rishikesh Ray. What is the investor look in entrepreneur and the project? What is the investor look in entrepreneur and their project?
Okay, there are two questions here.
Yes, sir.
Yeah, so entrepreneur में वो क्या देखते हैं? entrepreneur में वो देखते हैं कि क्या स्किल सेट है, क्या पैशन है, क्या उसने अभी तक कुछ किया हुआ है अपने आइडिया को लेके, उसने आइडिया को कुछ बढ़ाया है, उसमें उसने टाइम डाला है, कुछ पैसा अपना डाला है। अगर आपके अंदर आग है तो आप उसके लिए पैसा जुगाड़ करेंगे, आप उसको करेंगे। सो दैट इज व्हाट ही लुक्स फॉर इन द एंटरप्रेन्योर, and then in this project he will look for that uniqueness, that value that product is going to offer to that customer and all those things. पिछली स्लाइड्स में हम लोग ने इसको डिस्कस किया था। and when you are going ahead with a pitch deck, usually pitch deck concept became popular early on when you would get a chance to meet the investor for a few minutes, and then you would give it used to be called elevator pitch around 2000s, 90s and 2000s. So you would get a few minutes with him, and then in those few minutes you have to concisely present your idea. Now a pitch deck is more detailed. So again वही चीजें हैं कि आपको उसमें बहुत सारा आलतू फालतू चीज नहीं बताना है। The guy is very well informed. He is into this business of funding. He understands many sectors. और उसका भी अपना एक sectors का expertise है. He will fund within those sectors only. And if your sector and his sector are matching, he will be knowing everything about it. And so you have to only present your idea, your uniqueness, your team, how will it do it? You have taken care of all the regulation, rules, taxes, legalities. Then you have taken care of you've looked at the cost properly, you have looked at the revenue model, because money is important. If you don't make a sale, whatever great product you have made, it's of no use, right? So वो सब चीजें ही pitch deck में रखनी है. So just keep it concise, precise, to the point. And it should talk about all your differentiators. It should talk about those things only. Probably, I would say an ideal pitch deck should have something around 12 to 16 points, or 12 to 16, if you want to put it in a presentation you're giving online, then 12 to 16 slides, that's all.
Sir, I have a question.
Yeah.
Sir, does an investor invest on similar ideas of two different people?
अगर आप सेकंड पर्सन है उसको अप्रोच कर रहे हैं तो इट्स अ डबल एज सॉर्ड एक्चुअली, यूजुअली रिकमेंड नहीं किया जाता है, आप किसी और इन्वेस्टर को अप्रोच कर लीजिए जो सेक्टर में करता है, दैट इज अ बेटर चॉइस। क्योंकि पर उसका एक एडवांटेज ये भी होता है कि इफ योर कंपनी हैजंट परफॉर्म्ड वेरी वेल, देन प्रॉब्ली वन ऑफ हिज अदर इन्वेस्टमेंट विल टेक ओवर योर कंपनी, तो आपको एक एग्जिट रूट मिल जाता है, वो एक एडवांटेज होता है। फ्लिपकार्ट ने 3-4 एग्जीक्यूशन ऐसे ही किए थे क्योंकि उनके इन्वेस्टर्स कॉमन थे एंड दोज कंपनीज वर नॉट डूइंग दैट वेल। I'm forgetting the name of one acquisition they did. That company used to set price at very large discounts in electronics. And it was based out of Delhi. तो फ्लिपकार्ट ने उसको इसलिए सिर्फ खरीदा था क्योंकि प्राइसिंग पावर उस कंपनी के पास थी, 2 सेल्स उसके पास नहीं थी उतनी किसी भी प्रोडक्ट की। तो ये चीज है।
Thank you, sir. So anyone else who wants to ask question?
Okay, there is some request. Going to the Shark Tank. Please contact me on my email I had shared earlier, amit.trivedi@live.com. And just share your contact there and I'll get in touch with you.
So I don't think, sir, any question anyone else is going to. I think everybody's doubt has been cleared through this session. Thank you very much, sir, for this wonderful session. So, sir, I may request everyone to turn on their video so that we can take a happy picture of everyone.
Thank you, sir.
Welcome, ma'am, and thank you everyone for your participation and wonderful questions you have asked.
Thank you, sir.
Everyone, please
And-
turn on your video, please.
And wish you all the success, all the entrepreneurs here. I wish them all success in their ventures.
Okay, okay, sir. Thank you.
Dr. Akansha, please turn on your video once.
Actually, there is a problem here.
Okay.
I will not be able to turn on.
Okay. Sir,
Yes, ma'am.
Amit Shukla sir is also there, so I was asking him also to turn on his video. Vishalji, please turn on your video once. Thank you, sir. Thank you very much.
Welcome everyone.